Back in 2020, everyone was chasing the electric vehicles. Tesla was the star. Everything with EV in its name was skyrocketing. I was there. I bought it. I made money and I made a lot of mistakes. But these mistakes taught me how this hype cycle works. Now in 2025, I feel it's happening again. But this time with AI. I'm not making the same mistakes again. During the EV boom, Tesla went parabolic. But it wasn't just Tesla. There were stocks like NIO, Workhorse, Lodestone, etc. They were riding the wave. I bought into several of them. Some doubled, some went nowhere, some doubled and then went nowhere. But the mistake I made was holding them too long. Even the speculative names. I trusted the story and not the fundamentals. I got greedy, and by the time reality hit, I gave a lot of gains back. The same pattern is playing out again, just with a new name, AI. Every company is talking about artificial intelligence. Earnings calls are full of AI references. Stocks are reacting to buzzwords, not the balance sheets. If you are not careful, the fear of missing out can trick you into buying hype instead of value. So, in the AI space, Nvidia is the clear leader, just like Tesla was for EVs. Their revenue and profit growth back up their hype, and they are already executing at scale. That doesn't mean Nvidia is risk-free, but it does mean it's one of those few players with a real business behind the boom. Palantir is another company that gets a lot of attention. Let's draw similar to BYD during the EV cycle. They have been around for years. Now they are leaning into AI harder than ever. The difference? Palantir is already profitable, has a big government contracts. But watch it closely. Even real companies can get overvalued during these hype cycles. Beyond these companies, the landscape gets real blurry. For example, you have companies like C3 AI, BigBear, SoundHound, all exciting pitches, but not all of them are profitable. Some are even burning the cash. Many rely heavily on buzzwords and press releases, and that reminds me a lot of the EV stocks like Lodestone, for Workhorse, Frisker, Nikola, etc. that never delivered. The lesson is not every AI company is actually building something sustainable. One of the major mistakes I made during the EV hype was not having an exit plan. I got in early, watched things go up, and held through the top. I kept thinking it'll go higher and higher until it didn't. This time, I'm selling into strength. If a stock runs 100% on hype, I'm making sure I take the profits. I don't want to wait for the perfect exit. The second mistake I made was I trusted the narratives too much. In 2020, it was that every car will be electric by 2025 or 2030. Now it's every product will be AI powered. That may be true eventually, yes, but the timeline matters, execution matters. Some AI companies doesn't even have a mature product yet. Others have no revenue. I'm not investing in a dream anymore. I want the numbers. But here is how I'm approaching the AI cycle this time. I plan to buy more of infrastructure first, wherein like Nvidia, Microsoft and AMD, they are selling the tools powering the industry. And number two is I'm looking for actual revenue and cash flow. If a company isn't growing or still years away from profitability, I'm cautious. Number three is to take profits early. Don't try to time the exact top. Selling 20 to 30% after a big run can still lock gains and save your money. Separate the tech from the talk. If a company uses AI 15 times in a press release but can't explain the product, I'm out. Just to be clear, I believe AI will reshape the industry just like EVs are doing now. But the hype doesn't equal success. The stories doesn't protect your capital. I've seen this movie before. This time, I'm not chasing everything. I'm focused, or at least I think I do have a plan. So, what's your AI play right now? Are you going heavy into this cycle or sitting in the sidelines? Drop a comment and let's talk. And if you want no hype investing insights, hit that subscribe button. Thanks a lot for watching.